Nordstrom stock, ticker symbol JWN, is down over 20% today on very bad earnings, and especially their earnings outlook was very, very bad. And I actually find the stock pretty interesting, especially after this 20% move. Yes, the guidance were bad, and yes, the earnings were bad, but again, I decided to do an analysis on it to determine if maybe JWN got a little bit oversold and maybe a lot of the bad was actually priced in the stock today, or if it's still maybe some kind of a value trap and we should maybe wait a little bit more on it. Now with Nordstrom, actually, the earnings, the main reason, I think you know it, and we've been talking about it on the channel, and this is the pure kind of recession signal. Whenever consumers start cutting off on, such kind of things with Nordstrom, especially their Nordstrom Rack, which they own Nordstrom Rack, which is, their lower end type of business, and even the lower end actually experienced, pretty bad stuff, mainly because it's for lower income people. The softening trend was significant in consumer segment with the lowest income profile. For example, the Nordstrom banner item, which was lower kind of with prices, actually underperformed. The higher priced luxury projects, which was Nordstrom mostly is into, actually outperformed the lower priced product. So we're saying basically what I've been talking about, this is the proof of the recession, of the consumer getting squeezed and cutting back on clothing. And after cutting back on clothing, they're going to be cutting back on more things, and they're not going to be able to pile up credit card debt forever. So this is why Nordstrom is going down a lot and suffering a lot from earnings. Now their sales and everything wasn't really as bad as the market perceived, but the main problem was with the guidance. So their revenue went up around 12%. They have around 25% of their sales actually online, which is up more than 6%. The rack banner is up another 6%. But the main thing is the outlook, and this is where Nordstrom did not give a pretty good outlook. Especially on revenue, it's only 5 to 7% growth. Their earnings per share, EPS, is only from $2.45 to $2.75. This is pretty much a dollar decrease in EPS from their previous guidance, which is again pretty bad for the company. But if you actually take their earnings per share, which is GAAP on $2.45, you get a PE ratio pretty close to 7.5. So 7.5 PE for Nordstrom is actually not very expensive. But if you take what they had over here, which is, the adjusted EPS, and you take the lowest end of the range. Again, that's the lowest end, and this is revised lower, not including any share buybacks. This is $2.30, which is around an 8 PE for Nordstrom. So again, looking at those metrics, Nordstrom does not look expensive, but we have to dig in deeper to really find out, because it could maybe be a value trap. Okay, now the most important thing is the balance sheet, and looking at the balance sheet, it's not really good if you look at it on the surface. First of all, they only have pretty close to $500 million in cash. They have a lot of inventories they're trying to get rid of, especially in their lower end, which is they're likely going to have to lower prices, leading to lower margins. Maybe they may even have to sell some of them at a loss just to try to get rid of the inventory. But basically, they have around $494 million of cash, but their long-term debt is over $2.8 billion. Now, this is as much as the market cap. Now, Nordstrom is trading at $2.9 billion, but they have $2.8 billion of debt. And this is very, very concerning whenever you actually look at the long-term debt. But again, looking in a little bit deeper, the company has been paying some of the debt. For example, they had the high interest of 8.75. It was due in 2025. The company paid that off in 2021. But if you look at the debt maturities, there's only $250 million maturing in 2024, which the company can easily pay off. Using the free cash flows, they can pay the rest of it off due after 2027. The interest rate is not low, but again, it's not crazy high. But they have those 2038 debt, and even 2044. Around $900 million. So their debt is really far in the future, which is why the company has been kind of paying out a dividend and, doing these type of things as share buybacks. I would prefer them to pay back the debt. But again, the debt in the short term is not a concern, as it's maturing after 2027. And from now till 2027, I'm pretty confident the economy would have recovered and we would be on a much better path for those stocks, which is why I'm interested in buying those retailers. But I believe it could be a little bit too early to actually buy them right now, as we're not even halfway through this economic slowdown and recession. Now, the company has been doing some share buybacks, but they do have a lot of stock-based compensation, which really not showing up in their, diluted shares outstanding. If you look at them, they are not going down. So the main thing with Nordstrom, it's not really doing much on buybacks. The main thing is the dividends. They have around 500 million of buybacks approved, but their dividend is around 4%. And this is the main return you're going to get if you buy Nordstrom stock today. So if you looked at everything we talked about, and the 7 PE or 8 PE, on GAAP and non-GAAP and stuff like that, and we looked at the balance sheet, which does look ugly, but if you look at their maturity, which is really long in the future, it's not as bad as it is on paper. So that may sound that Nordstrom could potentially be a buy, but I don't really think so, mainly because of one thing, and this is their free cash flow. Their free cash flow have declined a lot. If you look at their 6 months ended, last year it was 334 million. And now it's only 194 million, and I personally believe it's gonna keep going down in the future. And this is only for 6 months ended, which really kind of is pretty tricky to value something like Nordstrom. And again, some people try to use a DCF, but a DCF is pretty unpredictable with these type of stocks. So I have my own way of actually looking into it, and what I personally like to do, I like to look at the history of the stock. Now, history doesn't always repeat itself, but it's sometimes pretty close. So if I really look at something in with Nordstrom, they did have a negative 733 million in 2021, but this was due to many other kind of events and many other things that the company had to put in on the free cash flow statements that really made the numbers look much worse than expected. And same things they had in 2016. They did not make 1.3 billion in free cash flow. But again, if I look on average and I look at under not really bad situations, but again around pretty good situations, the really lowest ones was around 300 million in 2020 and around 359 million in 2015. And other than that, they had pretty steady numbers, and the analysts are expecting over 500 million of free cash flow in 2023, which would put the stock around, around 6 times free cash flow, which is pretty cheap for the company. But it could be happening next year, but I would not personally bet on it. So if I look at this number and I look 6 months to now, and it's only 194 million. Now, if I assume that this free cash flow declines another 25%, it would be around 150 million for 6 months, which is around, if you annualize it, 12 months is around 300 million. Okay, now 300 million, and the company is now trading around, 2.9, no, it's not 3.7 billion. The real market cap, we can see it here on Yahoo Finance, it's actually around 2.9 billion, which means if we take a pretty conservative estimate that the free cash flow is going to go down another 25%, we would come up with 10 times free cash flow for Nordstrom stock at those prices. And 10 times free cash flow is actually pretty expensive for a low grower like like Nordstrom. And I want to be very careful, as I believe the free cash flow can decline. But if the free cash flow just stays the same, it could actually be trading 8 to 9 times free cash flow, which is really not bad at all. But as you guys know, I'm pretty conservative with my estimates. And as I said many times, what I'm trying to do in my portfolio is to buy stock in companies that people actually need and not that they only want. And people want Nordstrom clothes, but they don't really actually need these type of fancy clothes maybe from Nordstrom. Maybe they can buy, maybe something else. All right, but again, Nordstrom is on the high end, which could actually somehow hold up much better than many other retailers. So for those reasons, I haven't personally bought JWN yet. And I don't really talk about my positions because many people kind of try to copy me and they don't know when to sell, they don't know when to buy, and they kind of blamed me for losses before, which is why I keep all my portfolio and my trade on my Patreon, where I can personally update my group and my people in the same exact second whenever I do something. So at least they really know, but I cannot really do it here on YouTube. I can't, for example, maybe I change my mind tomorrow, and I can't just keep making videos tomorrow that I change my mind for whatever reason. So this is the reasons why I do it on Patreon. But again, if I personally had to do anything on Nordstrom, I would personally sell maybe something around the $15 put for September 16. Again, this is no financial advice, but if I had to do something on Nordstrom, I would maybe be selling some kind of puts or maybe put credit spreads on Nordstrom to actually benefit from the implied volatility as it really increased after earnings and after this drop. And if I got assigned Nordstrom at $15, the free cash flow multiple on the stock would be, pretty close to 7 times free cash flow, which is pretty good for Nordstrom, and it would be something I would personally, just buy and dollar cost average down, as I'm not a market timer. If I find a bargain, I buy it. I think JWN now is cheaper, but it's not a bargain yet, especially as we're only halfway in a recession, in my opinion, maybe not even halfway. So again, things could get worse before they get better, but if JWN is at $15 or under, I personally believe we could be somewhere close to a pretty good buy. So this is my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.